Welcome students here in Accounting 104, Payroll Accounting. We're moving into Chapter 3. We're going to discuss exclusively Social Security taxes in this chapter. This is a huge part of our economy, a huge part of payroll, current political discussions. You hear this term brought up all the time. Most all of us have some understanding of what Social Security is all about. Hopefully we'll increase that understanding as we go through this discussion. Here we are, we've seen this picture before, but this is FDR in 1935, in the middle of the Great Depression, signing the Social Security Act. It's formally known as the Federal Insurance Contributions Act, or FICA, and we're going to use FICA to describe the type of taxes that we deal with and compute in the payroll process. So here is FDR signing it. Maybe of interest here, this is Frances Perkins. She is the Secretary of Labor at the time, appointed in 1933. She is the first woman to hold a cabinet-level office in the U.S. So a pretty significant lady and a pretty significant attendee to this signing. Also possibly of interest is out of all these folks here, there's one Republican. I think it's this gentleman right here is the only Republican in that came to and got into this picture. There may be others in the room, but the only one that got into the picture was this particular gentleman here. The rest of these are all politically Democrats. There's a Progressive Party member in there too, I believe. But this very much shows the character and makeup of the of Congress at the time. Male, in elderly. Okay. Anyway, very significant act, very important time in our nation's history, bringing relief to, the intent was, the aged survivors, meaning in the immediate meaning of the term, widows, but also widowers, and those that are disabled. So some referred to it at the time as the Widows and Orphans Act, but it was intended to deal with a crushing social issue that was obvious to everyone, that especially in a depression, but any time, but especially in a depression, who suffers the most? The aged, families without a primary income provider, and those who can't work due to disability. And this act was all encompassing in trying to address all of those social issues. So this is one of the posters at the time that was promoting the achievement of this act, and this came from the Social Security Board, which is a board set up to administer this act at the time. Okay, historically, that's what we're dealing with, and we're going to refer to the collective taxes that are involved in this, both Social Security and the health insurance or Medicare portion. We're going to refer those together as FICA taxes. So we'll get used to that acronym as we go on. Learning objectives, we're going to try to identify who is covered by Social Security and who isn't covered. And as we talk about that, we all understand, we've heard on and on and on about the challenges the Social Security system has. We've promised vastly more benefit than we have resources projected to pay for those benefits. And all the issues and solutions that we're searching for, oftentimes proposals are made to have cases where you can opt out of Social Security, where you can split your Social Security into a government, the traditional government program, and some into a private program. What we maybe are going to learn here as we talk about it is those options already exist for certain persons in the U.S. that are exempt from Social Security. We'll talk about that a little bit. We're also in this chapter going to identify the types of compensation that are defined as wages and therefore would become subject to Social Security. We're going to apply the current tax rates and do the calculations. And this is what all of this discussion in this course winds up. We talk about the law, the history, who it applies to, who it doesn't, and in the end, we're given problems and we have to make some computations, because that is what the payroll process is all about. This stands here, the SECA, for self-employment, and we'll get to that. We'll talk about that here in another discussion as we go on. Okay, for the mechanics and the detail about dealing with Social Security and trust account taxes from Social Security, this FIT stands for Federal Income Tax, which is going to be a Chapter 4 topic. Those collectively are very important deposits. They're computed per the law, they're set aside per the law, and they must be deposited per the law, and it's very detailed and serious. We're just going to describe those procedures and describe how they've evolved into what mostly now is electronic payment of those taxes. We're not going to complete this 941 in these sessions. We're saving this for one of the units toward the end of the course. So we have 2 units toward the end. One we're going to deal with the payroll register, and one we're going to deal with a couple forms, and one of those forms in an exercise will be to complete accurately Form 941, which is the form that reports to the government in macro what you are obligated to pay under Social Security and FIT withheld taxes and what you have paid. I'm going to show this slide several times throughout the course. I'm going to insert it into the discussion. It's something that I used in the past. It's kind of silly, but the point it's trying to make is that when we're dealing with the payroll process, we can view the payroll process as having a total cost to the employer, and that cost is made up of 2 expense areas. This big wheel here on this old-fashioned big wheel bicycle, those are the gross earnings, the total, which is an expense to the employer, whatever the gross earnings are. And that gross earning is then divided into the pieces under the law that we have to divide it into, and that's what the payroll process is all about. So we have the FICA taxes taken out, and that's what the topic of this discussion. What are those FICA taxes? They're made up of 2 things, Social Security and Medicare. We also have federal income tax. That's that FIT acronym that we saw earlier. That's the withheld amounts per the employee's particular situation described in what is called a W-4 form. And this is just an example of some of the voluntary up to this point. Of course, we have the Obamacare issue coming up on medical, but historically medical insurance paid by the employee was a voluntary agreement that with the employer that they were sharing part of the medical insurance that was offered by the employer. There could be many other things. This is overly simplified, but the point of it is that this big blue wheel is the expense, and then these are what are taken out of that total expense and categorized as liabilities at the time the payroll is recorded. This would be a FICA payable. The firm preparing the payroll would put this into FICA payable, federal income taxes payable, medical insurance with premium withheld payable. What's left over is the net paycheck. This is what the employee gets in cash. Now, what's the significance of the little wheel? Whenever you have a payroll event, you compute the gross wages, do the calculations to break it up into its components that you're required to under the law and by agreement. And again, this is very oversimplified. But it triggers then, that big wheel triggers always a trailing little wheel, often called the burden. And we describe it in this course as payroll taxes, but it also can include things like pension payments that the employer has promised to make on behalf of the employee. Now, what I want to point to this time as I show you this slide is this FICA slice here. This FICA is what we're going to study here, Social Security. It is taken out of the employee's paycheck. Okay? It also is an addition to, it is matched dollar for dollar, usually. Now that changed for 2 years with the Tax Relief Act of 2010. But usually the FICA amounts taken out here for both Social Security and Medicare, they comprise FICA, are matched and it paid in addition to that withheld amount. the employer incurs another expense, the expense of paying those FICA taxes under the law, matching dollar for dollar what the employee took out. So as we begin our discussion of FICA, I want you to keep that in mind in the payroll process, that because of the way the law is written, when you compute a FICA series of taxes, you automatically trigger another round of expenses of equal amount that we categorize as this total expense here called the payroll burden, but more appropriately payroll taxes. The combination, the sum of those two, this big blue wheel, this smaller blue wheel, both are expenses. They added together to give you the total cost of payroll. So we'll keep that in mind. I'll show this again and use this. It's an attempt to give us a perspective about this and how it affects the accounts. These two blue wheels are debits to expense accounts. These red slices here, these are credits to liability accounts. This would go to a wages payable account initially, and then immediately would come out and be removed from that and paid in cash, and the credit would go to cash. But that is the accounting for this. These red slices here, these are credits to the liability accounts, and the smaller blue wheel is one. In theoretical view, it is a debit to expense accounts of various categories. In sum, they make up what we call payroll taxes. Okay, hopefully that gives us a little perspective. Let's move on. Who is covered, and what are the coverages under FICA? So let's take a look at that. We have both FICA here, and we have the self-employment tax that was a refinement of FICA to deal with folks who are self-employed. And that passed in 1951, signed by Harry Truman. We'll get to that in some more detail. Now, what we have in front of us here is this tax that were shown as the current tax. Now, when the book was written and these slides are presented to you, it is as of the point in time where the employee was given a 2% relief of their portion of the Social Security tax. That's traditionally, and always before, that was a rare event, always before, this percentage was the same as this percentage. It was matched equally in percentage and equally in dollars. That 2010 Tax Relief Act was one that continued this or promoted this idea that to stimulate the economy, let's put more money back in the hands of employees earning checks. They'll spend more, it'll stimulate the economy. You can argue on, and economists do, about whether that was effective or not, but it has since expired, and now, as we sit in 2013, this is back up to 6%. So that is a confusion that's going to keep coming up in this course, because we're dropped into this transition from that relief that was passed by Congress on that percentage and where it's back to now. I don't think we're going to see too much of that anymore in the future, so you're going to need to think in terms of this number being the same as that number in the future. But most of the problems that you do, and they're shown in Cengage now, and they're shown in the textbook, it's going to remind you at the beginning, hey, we're going to use this 4.2%, that is the relieved rate, or the rate that is 2% lower than normally. But when they passed that, they didn't relieve the employer. The employer was maintained at the same rate. These are Medicare rates over here. This rate is withheld from the employee's check. That amount is matched by the employer, and it is not. It was not affected by that relief act for taxes to stimulate the economy. And so we saw the same thing happen with self-employment. So we saw the same thing happen when that act was passed. The self-employment tax, so it was also reduced on the employee's side. Now, they're one and the same person. When you're self-employed, you have to pay under this act both the employee's portion and the employer's portion. And again, the Medicare portion, which there's so many acronym confusions. We say Medicare. we say Medicare all the time. Some textbooks say Medicare, but this textbook is a little more formal. They're saying HI, which is health insurance, which is how it was originally described. Instead of Medicare, it was described as the health insurance portion of the FICA Act. Okay, so those are the rates, and you'll see those rates show up, but remember, no longer will it be 4.2%. From right now, as we sit today, it's back up to 6.2%. So, 3 issues we're going to worry about. Are you an employee or an independent contractor? We talked about this before. We know how important it is. We know how firms would probably love to call some folks that do work for them independent contractors because it relieves them from all the payroll and all the liability and all the burden, the additional payroll taxes. Here's what we mean by burden. Back up here, it relieves them of this obligation and relieves them of having to account for all this. So the idea is, it would be nice if we could get all this work done legally and under the law and have you be an independent contractor. But you have to be very careful in determining that. You have to ensure that you follow the law. And in cases where you're not sure, you need to ask the IRS. You fill out a form and say, tell me, is this an independent contractor in this particular situation or an employee? If you get it wrong, you're in trouble. You can be accounting for someone as an independent contractor, be incorrect in your determination, and be liable for all of the wages, the withheld amounts, the FICA taxes, on and on and on, that you didn't take care of, you didn't remit to the federal government, you didn't do properly, and penalties on top of that. So it is a real serious issue. And so you begin by assuming probably in cases it's an employee, and then have very strong evidence that we can move that categorization and that understanding and call someone an independent contractor. And those tests and the rules are available for us to go through. We talked about some of those earlier discussions. Is the service we're talking about rendered considered employment or something else? And we'll talk about that. Is the compensation that we give considered taxable under the rules of Social Security? So these are all Social Security, Federal Insurance Contributions Act issues that we need to deal with as we go forward. And again, we just want to be made aware of these issues in this class. We don't make these determinations and problems. Usually we're given the answers to these as a default assumption in the problems that we do our computations with. So here's a link to the Social Security website, information for the employer. I'm going to go open that up and just show you that site just briefly. So here we are at that Social Security site, and it is for the employer. We've drilled down the menu a little bit to get to the employer, and that's where the link takes us. This is an important evolution with all the complexity of payroll tax law and labor law, that we do have these official websites where we can go get the most current information. It helps educate, it helps keep us on track. In the absence of this, in the absence of that internet access to these things, it's a massive undertaking to maintain all this information, all the nuances of regulation, and get it out to the employers. I mean, if it was in printed form only, the way it used to be when it was much simpler, place that in today's stacks of law and regulation and complexity, it'd be a whole lot more difficult. But these websites are available to us. We need to consider using them when we have questions. Go to the source. Go to the Social Security website and find out about it. A question, you can typically find it. We need to make sure that we avail ourselves of those resources. Okay, here we're going to talk about independent contractor. That independent contractor would be subject to self-employment taxes, and there are lots of them, and they are legal independent contractors, and they exist, but they fall under Social Security as self-employed, and they follow the self-employed rules, where they pay both the employer and the employee side of that tax structure. So if every person can be considered an employer if they employ one or more individuals. Now that's a pretty simple, straightforward definition. You're officially, legally an employer if you employ someone. That's not an earth-shaking understanding, but it is very basic and fundamental to applying these rules where they need to be applied. A person includes just about every form of business organization that you could think of: trusts, estates, individuals, partnerships, corporations, the hybrids of those things like limited liability partnerships and limited liability corporations. They don't escape Social Security and the federal law. They fall under it as employers if they employ someone, very basically. Over the course of history, certain occupations, for differing reasons, have become noted as being specifically covered by FICA, and it probably came up under this notion of, for example, a life insurance salesperson. Are they an independent contractor or are they employed? And so the debate probably raged, and the rules probably evolved, and finally they just made a determination, said, okay, if you're a full-time life insurance salesman, you're an employee and you're covered by FICA. So we'll stop having to have these arguments and stop having to possibly have firms tweaking the employment agreement with these salespeople to possibly have them fall outside of the obligations of FICA. Likewise, if you're a commission driver in the food and beverage or dry cleaning industry, I'm sure this evolved probably the same way, where you come to work for us, you get paid by what you sell, you drive our trucks, or you deliver our dry cleaning or whatever. They finally made a determination, look, if you're in that occupation doing that, let's not get into any more detail. You're going to be under FICA. You're going to be required to be withholding FICA taxes in that arrangement. If you're traveling full-time as a salesperson, that doesn't all of a sudden make you an independent contractor. That specific occupation, we're told by regulation, is covered by FICA. And those working at home on products that employer supplies and returned, like you take in the textile industry a cutting of a pattern and you sew it at home or you do something to it. Those kinds of things possibly evolved and raised questions of, maybe I'm an independent contractor. Well, the regulation caught up with that probably and said, let's stop, trying to split hairs here. Let's go ahead and bring those individuals as clearly and definitely under the law subject to FICA. They're not independent contractors, in other words. Okay, and I've mentioned this before, and you'll hear me say it a lot. I mean, it's a huge issue, but dare not misclassify them. If you get it wrong, and the misclassification would be they're an independent contractor, not an employee. That's where the greater danger is. I am sure that you can misclassify as an independent contractor and make them an employee, but the damages aren't really evident there, because whether you're an independent contractor or an employee, you wind up being obligated for Social Security taxes and Medicare taxes. Either way, it doesn't matter. The problem is if you are an employer and you call someone an independent contractor, then you walk away from the obligation of making those payments withheld from that check and matched by the employer and sent directly to the federal government. And that is an absolute obligation of yours as an employer. So they're not going to go chase around the independent contractor that should have been an employee. They're going to go directly to the employer and say, you misclassified, you owe us all those taxes, you must pay us all those taxes, and you must pay a penalty. So that penalty issue for making that mistake is very significant, and it gets to be awful if it occurred over a lengthy period of time, which does happen. Here it's describing the penalty. It's equal to the employer's share of the FICA plus the income taxes, the FIT, that were not withheld from the employee's earning. That's the penalty. Plus you have to pay the taxes too. If the employee went ahead and reported on a 1040. In other words, the employee corrected it and said, well, no, I'm going to report those earnings and let the federal government know they're owed to them. In other words, kind of correcting it. The penalty can be voided. It can be reduced if the employer files a 1099, which is an indication that we made a payment to this independent contractor. We're notifying the IRS that it went to a Social Security number or a employer ID number, so the IRS is aware of it. It helps it to not become part of the underground economy. You may get a reduction in your penalty there. But we don't need to worry too much about how to reduce penalties. What we probably need to worry about as students of payroll is be very diligent when you're involved in a real world situation as to who is independent and who is an employee. Here we want to talk about some more specific situations about who is subject to FICA and who is not subject to FICA. Now, this is the one that I was alluding to about a lot of people in our economy are not subject to FICA. Government employees. That has bounced around and evolved and changed, but it has resulted in many government employees today do not fall under the Social Security system. And that may be a surprise because there are a lot of government employees, and so it's a significant issue. We'll look at more detail on that in a minute. Expatriates may be exempt from FICA, depending on the country they're in. Family employees. So we saw that when we looked at some of the child labor laws and what you can, who you can hire and what you have to pay them if they're family members and what they can do and all those kinds of things, earlier discussions. Well, that flows over to this, where in certain situations, children, hiring your own children, you can compensate them, and that amount of compensation is not subject to FICA. And I think that's a social issue. It's trying to allow families to maintain family businesses and the cohesiveness of the family without having additional taxes involved. Domestics, household employees, they are under FICA if their wages exceed a certain amount, and that amount, I'm sure, is subject to change by regulation as inflation impacts it. So you are obligated to deal with FICA and to pay FICA taxes and withhold FICA taxes in domestic employee like nanny or cook situations. Nominal amounts, an occasional babysitter, no, but when their annual wages get up to a certain level, currently that's $1,800, you're obligated. Additional exemptions for special situations where someone might walk in and say, these student nurses, they're receiving a nominal amount as nurses and they're doing work in the hospital, and why aren't they paying taxes? Well, they've been specifically exempted because it's a nominal amount, it's in training, it's for a good social cause, all those reasons. They're given an exemption from FICA taxes. Here's another list of exempt employment, and we're not doing this to memorize these things. We just need to understand there's a scope always in a rule, and the scope is usually very broad, very detailed, sometimes detailed to the point of it being curious, why is this particular detail in it? But just to be aware, here are some of the things. Agricultural services, they always there's always a special issue with labor and federal law and agriculture. They're a different activity completely, and they usually fall under much different laws. And so if the compensation is less than $2,500 in any calendar year, or less than $150 for each worker in a calendar year, then it's nominal and it doesn't need to fall under FICA. And I think this may be designed for small family farms that occasionally hire people to do a little harvest work and that kind of thing, trying to make sure that that economic entity can be vital and continue and not overly burdened by the issue of taxes. Here's some other things. Domestic service in a college or college club, students get exemptions for certain things. Civilians that work for the military, railroad workers. Railroad workers fall under a completely different system. It's an entire system, an entire bureaucracy. There are lots of people still employed in dealing with railroad retirement issues. It just came out of federal law over the course of our history, probably because of railroad development was a huge thing in the nation's development, and massive federal subsidies went into getting railroads built across the country. And as part of that, they dealt with railroad workers different. They have a separate retirement program, and they are not under the Social Security system. We have other things here. Performed in the employment of foreign governments. There are cases there where there's exemptions. Newspaper carriers. We saw this under child labor, where they get to be exempt for a lot of the child labor laws. Delivering newspapers, you're under the age of 18, special treatment, exempt from Social Security. So that was I'm sure a lobbying issue, a social need or social good issue where they felt that we're not going to pull them into the system. It's nominal amounts. It's young people doing something good, earning their own money and delivering the news, which is a critical function in our society. So that's there too. Student nurses we've mentioned. Other issues with students in general. We're not looking at this to memorize it or do anything, but just make note of the detail in federal law always. Go to the source if there's a question. Get help or get consulting help when you have a serious issue in that regard. Back to government employees that are exempt. I mentioned that is a surprise to many of us that government employees are not under Social Security as a rule 100%. Some are, some aren't. At a federal level, if you're hired after this date, you are under the system. Okay? They changed it in 1983. Hired prior to 84, only the health insurance Medicare applied, not the Social Security piece. So that's a bit of complexity. So you can find federal employees that are not under the Social Security system. They're under a federal retirement system. And then you can find employees that are under the Social Security system. So over time now, those not under Social Security, they're going to reach retirement and complete retirement, and they're not going to be replaced. So that's going to go away. But it still right now exists, and there's a huge amount of baby boomers that went to work right after college for the federal government before 1983 that are in the federal retirement system outside of Social Security. State and local workers, again, we have dates about when you might be covered and when you might not be covered. We have a hired after 1986 date and covered by a public retirement plan. Then you only deal with Medicare under Social Security. If the work is done after 1991 and you don't have a separate public retirement plan, then you are under Social Security. So there's a lot of federal employees under Social Security. There's a lot of state and local employees that aren't under Social Security. I'll show you a slide on that in a minute here. Military, the only nuance here in coverage is the base pay, full FICA taxes apply, excess basic pay not subject to FICA tax. And we have a National Guard differential here between civilian FICA tax and National Guard tax. So looking at this little research locally, those opting out of Social Security, these are some examples of it. Using a personal retirement account system. This is okay under Social Security. The Sound Transit employees, it's a public agency, and all those employees aren't under Social Security. They've opted out. Under this series and evolution of law, they're now in separate personal retirement accounts. Under a public retirement account called the Municipal Employee Benefit Trust, that cities, municipal meaning cities use this system. The public employees in these cities City of Federal Way, Redmond, Bellevue, Edmonds, and Woodinville, they are under this Municipal Employee Benefit Trust Program, and they don't pay into Social Security taxes. Now, there may be splits here where in the city of Woodinville, I don't know, or city of Edmonds, they have some employees on it and some employees not. I don't know the detail of that. And some of this may have changed since the research I did brought it up. But the point is that there are lots of people working that we would think would be under Social Security. We sort of think everybody is, but they're not. There are exemptions to Social Security. And it brings to point some of the political debates about fixing Social Security and having more options to opt out and to get some of those funds into other retirement accounts, for example. And I know when those are proposed politically, it also brings up huge amounts of pushback and criticism. But in point of fact, it's going on right now. All of these employees are they've opted out, and they are in different systems as we go forward. So we'll keep that in mind, just as background information here. So now let's talk a little bit more about the independent contractor and issues involving that contractor. You may be classified as that instead of an employee if you conduct an independent trade or business, so you're in your business for yourself as an independent contractor. This link here, I'm not going to open it up, but it's available to you in these PowerPoints if you want to do it. And by the way, remember, I keep all these lecture PowerPoints under the Resources tab. So not only can you hear the live lecture with them, you can go open the PowerPoints by yourself if you want. They're under the Resources tab. But I do want to go open up the ebook and look at the characteristics of an independent contractor and show you how subjective and involved it gets. So let's go do that. So here we are in the ebook, and it's Engage. Tests for independent contractor. These are the tests. There's 10 of them. They hire and supervise employees. That would be an indication that you're an independent contractor. They determine the sequence of work. They don't report and then follow orders from the party that's paying them to get the work done. They set their own hours. They work for multiple employers. They're not exclusively working for one employer. They're paid by the job. They'll do this work for others besides the employer they're currently doing work for. The general public can hire them and use them. They have an opportunity for a profit or loss. In other words, they have something at risk in the enterprise working as an independent contractor. They furnish their own tools. They typically have a substantial investment in tools, equipment, training, all those kinds of things. They can be dismissed because they didn't meet the terms of the contract. So all of these are indicators that you're dealing with an independent contractor. And you can get close on some of them, or you can get to this issue. Is $500 a substantial investment, or does it have to be $5,000? Does it have to be $200? These are all subjective tests, and so it's a dangerous area to start making quick assumptions. You need to get help, and very often the wise thing to do is to ask for a ruling from the IRS, give them the circumstances, and get their blessing so that you're not hanging out. Or get good consulting advice from those who give advice and are in the business and know what current view of IRS is and know it in enough detail to apply it to your situation as a consultant and tell you whether you have in front of you an independent contractor or an employee. So then as a result, if you were an independent contractor, then you're the one that's liable for Social Security, and you're liable for the payment of those taxes, not the party that paid you under the contract. Okay, let's get on and say, under Social Security, what wages are we supposed to tax for Social Security? Here we go. Cash, wages and salaries, bonuses, those are FICA taxable wages, and commissions, the value of meals and lodging, but if those are provided only for the employee's convenience. So per diem amounts because you're traveling outside of where you live and you're being compensated for out-of-pocket expenses you're going to incur for meals and lodging to perform the work you have to perform, that's a different issue. But if your employer simply buys you meals routinely and doesn't need to, that's a form of compensation that technically falls under Social Security. Fair market value of all these things, non-cash compensation, and this is to prevent people from trying to get around the Social Security laws. So they're going to bring that stuff in too. So you can't pay someone in non-cash items, give them things of value to try to avoid Social Security. Life insurance premiums, prizes, fringe benefits like the use of a corporate car, that's a form of compensation and it's brought in and calculated. Payment in stock, gifts. These are logical things that have to evolve in regulation to tighten it up, to make sure that some employers and employees don't try to avoid all of this by setting up special compensation vehicles. In addition to that, of course, vacation pay it's not excluded. It's part of taxable wages. Okay, we'll go take a peek at some other ones here in the ebook just to make sure we've been exposed to that. Here we are. We're not trying to memorize. We're just trying to bounce through some of these to make note of some of them. Jury duty, that's taxable. Dismissal pay, death benefits, Christmas gifts, death benefits I mentioned, bonuses, advance payments, prizes, all of those things, insurance premiums, those are forms of compensation, and Social Security wants them included in the base of taxable earnings under Social Security. So just keep that in mind. It isn't simple as to cash hourly earnings. It's all these other things too. Okay, so this slide is going to talk about what's taxable, and the issue is tips. We need to talk about that a little bit. Tips greater than $20 a month, taxable. The employee reports that tips using that particular form. Employer calculates FICA tips on tips and withholds from the regular paycheck on the reported tips that the employee reports using that form. So that's a process where the employee is required to tell the employer what their tips were, report it to the employer so that the employer can withhold FICA taxes on that, on the basis of those reported tips. And the employer must do that in the first paycheck after the employee has reported those tips. Employer must match those funds, their share of FICA, on those reported tips. Okay, that's the first notion here or idea. But then there's this other issue that's a little bit more interesting. Large employers, and they define that as 11 plus employees, they must allocate. So if they're typically in an industry that tips, the large employers have to take their gross receipts, their total sales, times 8%, and then subtract from that the tips that the employees reported. Now, if there's a difference, if there is a difference between those two numbers, the employer has to report those as tips and pay FICA taxes on them. In other words, there is not a great deal of trust that the employees are reporting everything because lots of tips are in cash. And the employee knows if they report in cash that taxes are going to be taken out of it. So in big firms, the IRS and Social Security say, hey, we have a solution for that. We think tips are going to be at least 8%. What do we think of as tips? We think of typically in a restaurant, around 20%. 10 to 20% in a restaurant. So the IRS is just saying, hey, if you guys aren't reporting at least 8% in tips, then we're going to make the employer pay it anyway. Not the employee. They only pay on reported tips, but the employer does have this additional obligation to kind of fess up. The IRS and Social Security believing possibly that it's not logical that the tips would only average 8% of gross receipts, when custom is that tips get closer to 20%. So you have to withhold FICA on allocated tips, and you get an allocated tip if there is a difference between what was reported and your gross receipts times 8%. Okay, employer can claim a credit for FICA taxes paid on certain employee tips on that form. That's interesting, possibly if you're actually having to produce the form. So we're not going to get too worried about that here. So this is telling us that the employer has to show the allocated tip on the W-2 that they submit at year end. It's just a disclosure that they tie together onto that W-2. So that's a discussion of tips, and that's the IRS and Social Security evolving to try to get any of the economy that goes on outside of the reporting area to drag it back in and try and get the fair share of taxes paid by it. Okay, let's talk about some wages that are not under Social Security that are exempt. Okay. Okay, this list here, these are don't fall under FICA. FICA taxes are not taken out. It's not very significant except for this one right here. This is huge. This is huge. That employer contributions to pension plans, which will fall into a retirement plan for the benefit of the employee that eventually is going to come back out and get taxed eventually. So it isn't like it will never get taxed. It just defers the tax to the future. But it is what encourages employers to contribute to pensions, and what it encourages employees to participate in pension plans outside of Social Security, 401ks, etc. So if you're, as an employee, you're given meals and lodging, and they're to make a schedule work better for the employer, it isn't mandatory that you have your meals here or you stay overnight here, but it just makes it a whole lot easier for the employer. Those are not considered compensation to the employee, and they don't fall under FICA. Prolonged sick pay after 6 months and third-party insurance payments under certain stipulations, they're not considered FICA or Social Security and Medicare FICA compensation. Difference between employee salary and military pay, education assistance, these kinds of things. These are also specific and not major dollar amounts, but they have been by regulation exempted from wages. But in this list, here's the big one here, this employer contribution to pension plan. That has an entire industry jumping to provide those systems to encourage development of pension plans. Okay, now we need to get to the computation and the calculation of Social Security and Medicare. After all this background information, this is what we do in the course. This is where we finally put these ideas to paper or computer and get some things answered. So, what does this mean again? Remember from the previous discussions, it's the original acronym for, what is it? Let's repeat it. Old age, survivors, and disability insurance. So those are Social Security wages. They have a cap. That means right now, and this is 2012, the wages up to that amount are taxed for Social Security, old age, survivors, and disability insurance under FICA. That cap has evolved. It's been going up every year. Every year. 12 years ago it was 78,000. Now it's clear up to 110,000. It'll keep going up. That is a major issue for us to worry about in this class, that we've got to watch out for caps all the time. And we'll talk some more about that later. This is where we think the cap's going to be, or it is. It says estimated, but I think it has evolved to be at that number, 113,100 for 2013. And so we're talking here about Social Security, and we're talking about when you stop having to pay Social Security in any one year, when you've paid Social Security on this much for 2013. Medicare, which we call HI, health insurance, Medicare wages tax 1.45% for the employee, 1.45% for the employer, has no cap, ever, no ceiling. So you compute the tax on all of the earnings, all of the wages that are subject to FICA. There is legislation, tentative, and this was at the time the book was built, that there will be a surcharge. This passed, this happened, and so there is currently a surcharge for those of higher incomes, 200,000 single, 250 married. They pay this 0.9% surtax, additional amount for Medicare. It was part of the legislation following Obamacare. So this particular tax is in place, and it is a change from historically where they didn't increase the rate based on income. Here they're increasing the rate based on income. And this also, this surtax also came into place. That's an income tax. We're worried about this one here in this class. This would come out in the tables when you look up the current tables to do federal income tax. That's going to come up in Chapter 4. Okay, the employer doesn't match these surtaxes for health insurance, so it was just targeted to the personal take-home pay of those earning $200,000 to $250,000. They're going to take home a little less because of that surtax for Medicare that the law was passed. They're tossing in this interesting note. In 1950, there were only 16 workers paying into Social Security for every one person collecting benefits. When it first started, you can go back when that number was really high, like 40 workers for everyone getting benefits. And you've heard this before, but we look into the future, go into the future 15 years. Some people are projecting 2 workers for everyone collecting benefits. And what you have to realize is that the revenue that they collect in any one year is paid out in that year. Even though we collected surpluses for many, many years, when it was reformed in the 1980s, we spent the surpluses. We do owe it to the Social Security system as taxpayers, but it was already spent. Congress spent it. And so when there are 2 workers supporting one person retired on Social Security in the future, the taxes aren't not going to be adequate. The general tax structure is going to have to fix it and make it up, and it's going to be a huge burden to deal with that in the future. We have built a bit of a problem that we know is coming. We need to have open and clear and unemotional debates about how to get that fixed. There it is, 2042. So that's 30 years into the future. Okay. Let's remind ourselves then again of this issue of caps. The reason I want to get into some more detail is to just be very sure that when you deal with Social Security, and also when we deal with some unemployment taxes, there's an annual cap that applies in situations, and when you encounter it, you have to be very careful or you'll make a mistake in the calculation. Social Security, 6.2% normally. The problems in the book on the employee side are going to be 4.2, and you're going to be warned of that. But in 2000, this should say, I had to stop and correct that. This should say what it says now, 113,100. That's what we expect the cap to be for Social Security in the year we're in right now. This is ongoing. The rate now in 2013 is 6.2% for both the employee and the employer. And these are the rates for Medicare, except for the surtax on those with the higher income levels, $200,000 to $250,000. So when you run into a cap, how should you think about it? So when you're dealing with a payroll calculation, you ask this question: for this payroll calculation, were the total year-to-date earnings already above the cap? And year-to-date earnings means the earnings just before you compute the payroll you're working on. What have you earned and has been recorded year-to-date? If those were already over the cap, yes, then you're done with the tax. You don't have to apply the tax to any of the current payroll you're working with. But if the answer is no, we look at year-to-date, it's still under the cap, like cap now is 113. Let's say your year-to-date was 50,000. Well, no, you're not over the cap yet. So the answer was no. So then you ask the question, well, will I get over the cap with this payroll? Let's say your payroll is $5,000. You're at $50,000. You're worried about a cap of $113,000. No, you're not going to get over the cap by adding $5,000 to $50,000. So the answer is no. We would proceed with that to decide that all of the current payroll you're calculating is subject to the tax, because this current payroll won't get you over the annual cap. But if this current payroll will get you over the annual cap, then you have to be very careful and take the year-to-date earnings, subtract them from the cap, and that amount, which would be a portion of the current payroll, only that amount is subject to the tax. This is the toughest situation here to make sure you get to correctly, that, oh, I'm going to go over the cap with this payroll. Only some of this gross earnings is subject to Social Security. So that's maybe a little bit of a help with the caps. We'll see. We need to be very careful with caps in the future. Let's do a couple calculations of FICA. Tamara earns $138,000 a year, paid semi-monthly. These are the dates. Determine FICA for October 30th payroll. Now, this is a bit of a puzzle. In the real world, you would have year-to-date information. You would see what's been paid in, but they're asking us to figure it out because we should be able to do that. So first, we must find the prior payroll year-to-date. They won't tell us, but we can figure it out. If she earns this much and she's paid semi-annually, this 138 by 24, that's how much she gets in every paycheck. We're in October. So how many payrolls in October? How many payrolls have occurred prior to this October 30th, the second payroll in October? And if we count on the calendar, we would discover there were 19 payrolls. So this particular party, Tamara, employee, had received this gross every semi-monthly paycheck all the way through the year till she received the one for the first semi-monthly payment in October also to get her to 19. So her earnings, before we consider the $5,750 that she's earned between the middle of October and the end of October, before we consider that, her earnings have already been recorded, taxes taken out on this much. Now, we would then have to ask how much is considered for Social Security, remembering that only OASDI, which we call Social Security, Old Age Survivors and Disability Insurance, only that one is capped. Medicare isn't capped. And this is the situation that I pointed out back here, where we're doing this right here. We're getting the difference between the year-to-date and the cap. So that's what we have to do here. The cap in this example, this would be the 2012 cap, minus the year-to-date earnings, out of which have been taken appropriate taxes. Only $850 out of this total paycheck that we're working on is subject to Social Security. And after that is paid, then no more of the November and December paychecks get hit for Social Security in this particular one. So multiplying this times the two rates in effect at the time in 2012, the lower rate for the employee, the full rate for the employer, those are the Social Security taxes. Medicare, which we call HI in these problems, no worries, no caps, just whatever they earn, that's the full October 30th gross pay times 1.45%, and that is again matched by the employer. So we total these things up, we get this plus this is the this number here, Tamara's Social Security plus Tamara's Medicare, that's Tamara's withheld amount, and in the employer, this is the employer's Social Security plus this again matched for Medicare, that number right there, there's the employer's FICA taxes. So this is a real good example, real good issue that you have to get comfortable with and deal with in the problems as we move on in the course. Okay, then the last example we're going to look at in this introduction to Chapter 3 is this one here, where we have just another example of calculating FICA. This employee earns $175,000 a year, is paid every month. Let's worry about the FICA payroll calculations for August 1st. So we have all the months before August 1st, one pay period per month. So let's begin finding out what a monthly gross is. Annual salary divided by 12. Each monthly check has a gross of $14,000+. How many payrolls have occurred before today's payroll? 7. So we've got 7 months have gone by through July. July was the 7th month. And so Social Security has been taken out of a total of $102,000 year to date before we get to August payroll to calculate. And that's what we're working with here, August payroll. Well, August payroll of $14,000+ added to the year to date before August is going to run us over the cap. So we're not going to subject the whole check to Social Security. We're just going to take the 2012 annual cap minus the year to date through July that we calculated. So only $8,000+ out of the total of $14,000 is taxed for Social Security. And so that tax for the employee in 2012 was that lowered rate again. The tax for the employer was the higher rate. What would we do about health insurance? We don't care about caps. We would hit both checks, or both parties, employer and employee, would hit this amount. 1.45% would be withheld for the employee, and it would be matched dollar for dollar by the employer. And that's shown here. And so then we can calculate the total. Just reminding ourselves, don't cap wages when you compute health insurance or Medicare. Okay, that concludes our introduction to Social Security, Medicare, lots of background, and then calculations. And what you're going to be asked to do in your homework assignments and most other things is, especially the homework assignment, is do these calculations. In the quizzes, we're going to allude to some of these other issues about who is covered under Social Security, who is not covered under, what are some of the rules about compensable wages, what are some of the rules about how you deal with tips, those kind of things. And remember, those are all available to you to research. We have open book policy on our tests and quizzes, so don't go unprepared. You won't have enough time to do your quizzes or your final exam. Come prepared, but feel free to confirm what you think is the right answer by a quick look up in that ebook of the issue at hand. So we're going to move on and talk about self-employment here as a separate topic right next.